Now, you know that what are candlesticks? What is the meaning of up? What is the meaning of down? What is the wick of the candle? What is the down bottom wick of the candle? What is the opening price? What is the closing price? You can look at any candle and tell the opening price, closing price, and what actually a candle represents. You now know what a candle is. And if you don't know, please watch the previous video that I have uploaded and then come back to this video. Okay, so now let's learn about the patterns of candlestick. So in candlestick patterns, there are various patterns, or the candlesticks represent various things. Looking at a candle, you can tell what it represents and whether it is going to go up or down. So you can tell that. So candles, here you have this type of candle. There are different types of candle and the candles are called by different names. So this is basically the normal candle, but they have given a name for it. So this type of candle is called a doji. Doji means the candle whose opening and closing price is almost in the same price, in the same range. So in a doji, the opening price, you can look here. So this is the opening price and the same price is the closing price. So the company has opened and closed in almost the same price. So the company opened here, then it might have gone down, up, but at the end it has closed at the same price. So the wick is long. Maybe it has a longer wick. The up and bottom is long, but it doesn't mean that it has opened or closed at the up or below. So the company, so here what a doji actually represents. So by looking at the doji candle, what do you mean? So by looking at this normal doji, what does it represent? So the company opened here, right? Then the buyers pulled the company up. So because there was a lot of buying, a lot of people were buying the company, the price moved up, but then the sellers came back. The sellers were fighting to sell. So the sellers were selling the company. Then at the end, both buyers and sellers fought. There was a competition between buyers and sellers got cancelled each other. The price has actually closed at the same price. So this is like a tug of war. So you have seen a tug of war, right? In tug of war, there are companies standing beside this line, and there are people standing beside this line. So this is the line, and there are people standing this side of the line and that side of the line. So the people this side will push it this side, and then the people this side will come back and they will pull here. So there will be people who are pulling it right side, and they will be pulling the rope right side. So they will move slightly right, and then the people left side will pull it more hardly to the left. But at the end, it is a draw. So the people will come again to the same place where they were standing. So it is like a tug of war with equal strength people, with the opponents being the equal strength. So the opponents have the equal strength. So here, buying and selling is almost equal. So the number of people buying it and the number of people selling it are almost equal. And at the end, there is a war between those. So the buyers and sellers cancel each other, and the price has been closed here, the place where it has opened. So it opened here and it closed at the same place. But because of the buyers, it went up. Because of the sellers, it has gone down. But at the end, it has closed at the same place. So no one won. Neither the buyers won nor the sellers won. So it is a neutral competition. Long leg doji. So long leg doji means the sellers were little strong. So the sellers, the buyers and sellers were competing. You can see the buyers took it up, the sellers took it down. But at the end, the sellers were more strong actually. The sellers bought the price more below. But at the end, no one has won. So at the end, it is actually again a draw. So maybe if you imagine it in a tug of war case, so maybe right side team, the team which is present on the right, might have pulled more and gone behind. But at the end, the left side teams tried to pull it and they have come back again to the center. So you can imagine this in a kind of tug of war situation. But at the end, it is again neutral. The price has come to the same place where it started. So this is the price where it started going up, down. Now this is the dragonfly doji. So it looks like a see, it has top, right? This is present top, only the sellers were active. So the sellers pushed it down, but again the buyers came back and pulled it up. So it is like in a tug of war, the right side team has pulled it to the extreme, but the left side team has brought it back to the middle line. So that is what. So here the sellers were more strong actually. The sellers took the price down, but again the buyers came into action and have bought it here. So the place where it started, the price again came to the same place. It has moved down but came to the same place. So doji actually means a candle which opens and closes at the same price. That is actually doji. So there is not much difference between the opening and the closing price. That is called a doji. So it doesn't mean that there is no upward or downward movement. Obviously stock market will have movement. So there is a movement. There is up and down movement. But the opening and closing price is same. So that is what actually mean by a doji. This is gravestone doji. This is a dragonfly doji. You can imagine it by dragonfly. It flies up, right? So the opening and closing price is up. And gravestone. Gravestones are generally down. So this is like a gravestone. And gravestone doji means the opening and closing price is in the same place. So here what happens? The buyers are more active. So when a lot of people are buying the share of a company, the price goes high. But again, people started selling it. There were more number of sellers, and then the price has opened and closed in the same place. So this is what is meant by gravestone doji. So these are different types of candle. Doji. These are different types of doji candle. This doji, the normal one, which is in the middle. Here the long leg doji. So the leg of the doji is long. Here the dragonfly doji, and here is the gravestone doji. So in a doji, the opening and closing price will be same. So if a company is selling for 5 rupees, imagine a hypothetical company with 5 rupees of its share. The share price might have gone to 6. Again, it might have gone to 3. So there will be a movement. 5 to 6, 6 to 3. Like that, there might be a movement. But when the company opened at 5 rupees, again it has closed at 5 rupees. So that is so the if this is 5-minute candle, in that 5-minute period, the company started at 5 rupees, but again at the end of the 5 minutes, it has closed at 5 rupees. So that is what is meant by doji. Now we have the hangman. So in the hangman, what happens after, see, if the company is moving up, here you will find a company moving continuously up. There will be an upward graph like this, and then it will end with such a candle whose opening which is like this. This is a green candle because the candle is going upward. Then there is an upward movement, but then again there is a slight downward movement and upward movement. So it has opened here and closed here actually. So it has closed upward. But this hangman generally represents that the company will show a downward movement. So when you find such a candle, or like this red candle, when the company is moving up, you find such a red candle suddenly. So it means that the company might change its direction. So such hangman, it is like a it is such kind of this one. You can look at the candle. The candle has a longer wick. It doesn't have an upward wick. It just has this downward wick. So this is called an hangman. If you find this is a green candle, I have represented it in white, and blacks are the red candle. So the green candle, or it can be the red candle. If you find this kind of situation, you can expect the market to take a turn. So the company can go downward. So if you want to invest, for example, if you are doing intraday trading, if you find this candle, you can short sell from here. So you can have your stop loss here and you can short sell here. So all that can be done. I will teach you more further. But first, you must know that if this pattern comes, generally there will be a change in direction. So after upward movement, if you find this, there will be a change in pattern and it can go downward. So these hangman generally make a change in direction. Next is a hammer. So this is called the hammer, and it is a same. It is just like an hangman, but it comes below. So if a company is falling down, if the price is going, if the market is bearish, and if the company is going down, and if you find this hammer, so there is a chance of company going upward. There's a chance of change in direction. So because the buyers are coming into action, right? Hammer represents that the buyers are strong. Here also the hangman suddenly represents that the sellers were strong because the company is moving upward. But this wick is long because the sellers are strong. The sellers are becoming strong, right? If somebody is selling only, the wick will go down, right? It might have gone up, but the sellers put their full energy, right, to push the company down. There were a lot of sellers. So there can be a change in direction. And the same thing happens here in this case. In case of hammer, so the company was falling down, a lot of people were selling the company. But then this represents that there is an upward movement. You can see. So the wick is going down, but it has closed again upward, right? So there can be a change in direction. And this is the bullish engulfing pattern. So this is a red candle, and after a red candle you have a bigger green candle. This is a small red candle and the green candle is big. So bullish engulfing. So the market is the bull. That is the bull, right? This candle can be called the bull, green candle. So because the market is going, it shows upward direction, right? So bullish engulfing. Bull, it's like the bull engulfing the bear, like that. So this is bullish engulfing. And this is bearish engulfing. The red candle, that is the bear. After going upward, suddenly if you get this red candle, it means bearish engulfing pattern. So these are different types of pattern which you need to know. So like here, so there can be a change in direction. After, if you see the bullish engulfing pattern, the company can go upward after this because again the bulls have become strong and they are engulfing the bears. That is what it represents, right? This is the bear and this is the bullish candle. So the market was bearish, but you got a pattern here showing that the bulls suddenly became active. Suddenly the bulls came into action. So what can happen? The market can show an upward trend. Market can go upward. And the same thing happens in case of bearish. So the market was bullish, it was going upward, and then this is a bullish candle. But suddenly there was a large bearish candle, so the market can go downward. So these two are the bullish engulfing and bearish engulfing. Now let's go on the dark cloud. This is on the dark cloud. This candle doesn't have wick, right? It doesn't have wicks, and it is similar kind of thing. The green candle is below and the red candle, that is a red candle, is above the green candle. So what happens on the dark cloud? Because dark, red color is generally dark, right? So after green there is a red dark, that is red candle above the green candle. After the market going upward, there is suddenly a green candle. This is called a on the dark cloud. And the same thing is the piercing pattern. So the market was actually bearish. The market was actually bearish. So you can see the market was bearish, but suddenly there is a bullish candle. So the bullish candle is trying to go upward. It will go upward. There can be a change in direction after this. So these are the different kinds of patterns which you must know that how it works. So when these patterns, you must know the names of these patterns. So just try to understand why there is why that name has been given. So now the company is going downward, then all the candles are red, right? Because it's going downward, there's a downward movement. Then suddenly there is this kind of doji kind of candle. Doji candle is formed. Then a green candle is formed. So that is morning star because it is going upward now. Now it can show an upward direction. So after a red candle and a doji candle, then there can be an upward movement. So this kind of pattern, these three candles when they appear, it is called the morning star. And when this candle appears, this is the opposite of the which one we studied right previously. So here what happens, hangman, right? You studied hangman. So opposite of that is this one. So this is shooting star, right? Here it's like a star falling, right? When the stars fall, it's shooting stars. They fall from upward like this, and then you can see a comets. So it's like that. So the companies are moving upward. Then when a shooting star pattern occurs, this is a shooting star. So when a shooting star pattern occurs, there can be a change in direction. So even the shooting star represents a change in direction. There can be a change in direction. So in intraday trading, you can make use of all these to earn profits. So these actually represent there can be a change in direction. So when the company is falling down, and when you see an inverted hammer, there can be an upward movement. So this is called inverted hammer because you had seen the hammer was like this. This is inverted form of that hammer. So that's it for today. Now all of you might be clear about the different types of patterns. Just keep going through the video again and again, or just take screenshots. You can take screenshots of different patterns and just try to memorize them. There is nothing much to understand in the patterns. It's just like the companies are pulling downward, and then the market has opened here, then it closed here. There was an upward and downward movement. All that, it's easy to understand because anyways you have the knowledge of the candles. What is the opening price? What is the closing price? What is the wick? What is the meaning of the wick? So just your next goal is, your next homework is, just go take screenshots of different screens which I have shared you, and learn the candles. So immediately go and learn the candles, then continue with the course. So after learning only after you know the candles, you can know when you find a pattern in the graph. Like for example, when you're doing trading, and when you see a shooting star pattern, or when you see a hangman pattern, or when you see different types of pattern, when you see those patterns, you will know that what they represent, and there can be a change in direction. So there will be a sign that there can be a change in direction. So you can place your stop loss accordingly, or you can take your trade accordingly. So all that. So these are very important. Just memorize the patterns. Thank you very much. A subscribe to the channel would be fabulous.